Forex trading sessions. Understanding market hours. The Forex market operates 24 hours a day, 5 days a week, providing trading opportunities for traders around the world. However, the market is not equally active throughout the entire day. Understanding the different Forex trading sessions and their overlapping times is essential for traders to optimize their trading strategies and take advantage of the most liquid and volatile periods. Let's explore the major Forex trading sessions and their characteristics. Sydney session. The Sydney session marks the start of the Forex trading week. It begins at 10 p.m. GMT, which is 6 p.m. EST, and ends at 7 a.m. GMT, which is 3 a.m. EST. While it is the least volatile session, it sets the tone for the trading day ahead. Major currency pairs involving the Australian dollar, AUD, New Zealand dollar, NZD, and Japanese yen, JPY, are actively traded during this session. Tokyo session. The Tokyo session is also known as the Asian session. It starts at 11 p.m. GMT, which is 7 p.m. EST, and ends at 8 a.m. GMT, which is 4 a.m. EST. The Tokyo session is characterized by increased liquidity and volatility, primarily driven by the Japanese yen, JPY pairs. Economic news releases from Japan can significantly impact the market during this session. London session. The London session is considered the most active and liquid Forex trading session. It begins at 7 a.m. GMT, which is 3 a.m. EST, and overlaps with the Tokyo session for a few hours. The most significant market movements and trading volumes occur during this session. Major currency pairs involving the Euro, EUR, British Pound, GBP, and Swiss franc, CHF, are highly traded during the London session. New York session. The New York session, also known as the North American session, is the final major trading session of the day. It starts at 12 p.m. GMT, which is 8 a.m. EST, and overlaps with the London session for several hours. The New York session is known for high liquidity and volatility, with significant trading activities involving the US dollar, USD. Economic news releases from the United States can have a substantial impact on the market during this session. Overlapping sessions. One of the most important aspects of Forex trading is the overlapping periods between different trading sessions. These overlapping sessions offer increased liquidity and volatility, creating favorable trading conditions. The most notable overlapping sessions include Tokyo-London overlap. This overlap occurs between 7 a.m. GMT, which is 3 a.m. EST, and 8 a.m. GMT, which is 4 a.m. EST, when both the Tokyo and London sessions are open. It is characterized by increased trading activities involving the JPY, Euro, and GBP currency pairs. London-New York overlap. This overlap occurs between 12 p.m. GMT, which is 8 a.m. EST, and 4 p.m. GMT, which is 12 p.m. EST, when both the London and New York sessions are open. It is considered the most active and volatile period, with high trading volumes involving the USD, Euro, GBP, and CHF currency pairs. Understanding the Forex trading sessions and their overlapping times is crucial for traders to identify the most favorable times to trade. Traders often prefer to trade during the London and New York session overlaps due to the increased liquidity and volatility, which can result in more significant trading opportunities. It's important to note that while the Forex market operates 24 hours a day, not all currency pairs exhibit the same level of activity during each session. Traders should consider the specific characteristics and liquidity of the currency pairs they intend to trade when planning their trading strategies. Conclusion. Understanding the different Forex trading sessions and their characteristics is essential for traders to optimize their trading strategies and take advantage of the most liquid and volatile periods. The Sydney, Tokyo, London, and New York sessions each have unique features, with the London and New York sessions being the most active and liquid. Additionally, the overlapping periods between sessions offer increased liquidity and volatility, creating favorable trading conditions. By aligning their trading activities with the most active sessions and overlaps, traders can increase their chances of success in the Forex market.